Hello, ladies and gentlemen, crypto deep divers. Welcome back to Weekly Crypto. Today, I'm going to talk about Bitcoin. Also, I will touch on gold as well. So just in case you're new to the channel, just to remind everybody that you can earn EOS, Lumen, DAI token, basic attention token in Coinbase. So you can check it out. So before we get into that, make sure you subscribe to my channel so you don't miss out the upcoming airdrop token swap. Also, you can follow me on Twitter as well. So Team Draper talk about that Bitcoin price will go up to 250,000 by 2020. So just in case, I think a lot of people probably know Team Draper. He's a venture capitalist. He's a billionaire, and he's making a prediction that Bitcoin will go up to 250,000 by 2020. And he made that prediction in Yahoo Finance. And also he has a company, is a gym. He has a boxing gym that he invested in. So this is the first gym in America to accept Bitcoin. Also, the co-founder Tony Robbins also is part of the company as well. And the gym also pays the instructor starting $1,000 per hour. Oh wow, you get what you pay for, I guess. Those trainer probably top notch. So so basically, he's saying that 250,000 by 2022, and I'm hedging a little, maybe Q1 2023, but it will be 250,000 before that. So I don't know how he get the estimate in terms of how he come up with this number. I'm not sure. And also, of course, right now we have currency war, the trade war, and also the depreciation of the Chinese yuan, the renminbi, and I think there's a lot of outflow of capital probably from China because the renminbi is not you cannot easily exchange that currency to the open market. So I think a lot of capital flights may probably change it to Tether, and then using Tether to change it to Bitcoin, and then Bitcoin to US dollar. This is how they I guess get the money out of China. And also he talk. I think they talk about the Libra token, the Facebook coin. That I mean, to me, I think you're comparing apple and orange. Because Bitcoin is a truly decentralized model compared to Facebook, the Libra protocol, or the global coin. And the thing is, Facebook can shut down your account in a second. In terms of Bitcoin, it's difficult to shut down. I mean, maybe you shut down the whole internet, you probably will shut down the whole system. And the thing is, like in terms of global coin, you have to go through KYC. It's not anonymous. And another thing is they can shut down your account anytime they want. But Bitcoin is a censorship resistant. So if you are new in the space, you probably have to very clearly what is decentralized and what is not. And Facebook coin is very centralized, just like Ripple. And the next stop, we're going to talk about the gold. Right now, gold has been surging past 1,500 probably of yesterday. And right now, probably go back down a little bit below 1,500. So gold surge is a message. Basically, the central banks are out of control and not inflation. So you can see that the gold, you can see in a different cycle back in 2015, 2016, and 2017, those are the housing bubble. People are flipping houses like crazy. Even janitor buy different houses, buy so many houses and flip. And then of course they don't look at your credit score. They just everybody is qualified for a loan, and and another thing is like those loans are not the bank do not keep those loans. The loans resell it and then repackage it and sell it to the investor. So the people who lose the money is the investor, not the bank. And of course, after 2008, after the financial crisis, the housing bubble burst, the gold go to 1,000, and then 2011 it go all the way to 2,000, and it's almost 2,000, 1,923, and it goes back down again. To me, it looks like the gold has a cycle. It's almost every 8 to 10 years they will peak, and then after they peak at 8 to 10 years, then the next 8 to 10 years it will slowly go down, and then there will be, I mean, if you miss that cycle, you probably have to wait 8 to 10 years before it go back up again. Oh dear. And right now we are back to that next cycle probably. Right now probably 1,500 we already passed, and probably the next target will be probably 1,008 and then 2,000. And depending on whether there's also a lot of uncertainty in the market. Right now, we have a lot of uncertainty, the trade war, currency war, and there's a lot of uncertainty coming up. So that's another thing. People fight for safety, and the depreciation of the currency, the Chinese, the renminbi, and also here the gold versus copper. So in terms of gold versus copper, I think should tweet about Steph Porn Boy. Okay, he tweeted about the relationship between the metallic barometer of the financial insecurity gold versus the metallic barometer of economic activity, which is copper. That has been a reliable predictor of trouble in the past. So you can see there's a saving and loan crisis back in the 90s, and then you have I think the Mexico pesos. I think I cannot remember. I think they have a depreciation of currency during that time, and then you have an Asia financial crisis, the Pacific Rim. They have a financial crisis in 1997, and then you have a Nasdaq, the dot-com bubble burst in the 2000. And then you have an Enron case, the Enron collapse. And of course, 2003, 2005, 2006, and 2007, there's a housing bubble. And that's led to 2008, the financial crisis. And then you can see also 2011, the U.S. credit downgrade from AAA, I think, to 2A, I can't remember. So you can see every time there's a spike, that means people not trusting the central bank. So that's why there's a insecurity. That's why they fight for safety to the commodity, to gold. So people talking about gold is to hedge against inflation, but that may not be true because gold is basically a measure of faith in the central bank. And the reason why they say that is you can see gold versus faith in the central bank is everything under control. So back in the 1971, Nixon basically delinked the gold, delinked US dollar from gold. And back, before 1971, you basically bring a US dollar to the Federal Reserve, you can redeem for gold. So, but because of Nixon, after 1971, he delinked the gold standard. So you can no longer use your US dollar to redeem gold anymore. So after that, the gold price starting to increase, and in the 80s, gold closed at 850. This is the market top for the decades. From the 70s to 80s, it's almost like 10 years. So as I said earlier, it's like almost 8 to 10 years a cycle in terms of gold. So if you miss the peak, then you have to wait another 10 years to get to another peak. So this is not like cryptocurrency. The velocity is very fast. In terms of the turnover is very fast. Maybe 2 or 3 years, you can go back to the next cycle. But in terms of gold, it takes very long time. It's like every 8 to 10 years, they have a cycle, just like the stock market, also as well as the housing market. They have a cycle of 7 to 8 years. But right now, the stock market is a long stretch of bull market because of the quantitative easing to pop up the market. Otherwise, without this easy money policy, the cycle probably finish. But right now, because of the extended bull market, is because of the easy money policy, the quantitative easing, basically printing money out of thin air, and all this easy money flowing into the stock market, into the housing market. So, and then you have an inflation, U.S. inflation peak at the 14% in the 80s. During the 80s, you have stagflation. It's not hyperinflation, it's stagflation. And also, the Federal Reserve, they raised the Fed fund rate to from 11.2% in 1979 to at a peak of 20% in June 1981. So in the 80s, if you put your money in the bank, you basically get 20% like interest rate. This is easy breezy return with no risk. And you basically put your money in the bank, you get 20% interest rate because of the stagflation, because they have to fight inflation. So so this was not the rate hike directly linked to the drop in price of gold, but rather the rate hike convinced the public and the market the Fed had everything under the control. So this is because everything under the control, people trust the central bank. That's why the gold price going down again. And of course, you have a Alan Greenspan, the disinflation and slowly falling. So during the Alan Greenspan period, he slowly decreased the interest rate. That's a long period of time, and so and also this is I think every time when the gold price spike is because the people do not trust the central bank. So if the gold price go down, that means people are trusting the monetary system and they feel comfortable with the central bank, and central bank is everything is under control. Then the gold price will not spike. And Bank of England on May 7, 1999, and basically dumped the gold asset. At the time, the gold price was around 282 per ounce. And so basically they dump it. So they dump it in the auction. So that's why the price is so low. And I think during this time period, the Alan Greenspan period, people trust the central bank and everything is under control. So that's why the gold price is kind of low, 282 per ounce. And then you have a housing bubble building up in 2005, 2006, and 2007. And then 2008, you have a financial collapse, the global financial collapse. And then you have a Great Depression. So the gold price spike again. Of course, you have a QE and the QE quantitative easing. And then the gold peak at almost 1923 on August 2011. And then you have a European debt crisis underway as well. And of course, the Federal Reserve doing tons of QE. And and then you have a ECB. ECB, remember Mario Draghi talking about that. He made a famous speech about that ECB is ready to do whatever it takes to preserve the euro. And believe me, it will be enough. And then the gold closed at 1600. So the faith in the central bank temporarily restored because of all this policymaker. People trust the central bank again. And December 17, 2015, the faith in central banks peaked again. I think 2015 they did after the QE and everything. The stock market go well and everything. The market seems to be stabilized. Anyway, so this is pretty interesting because people talk about gold is a hedge against inflation, and gold is basically whether they have faith in the central bank, whether the central bank everything is under the control. And right now, the 10-year Treasury is approaching record low yield. It's very abnormal, but I think a few months ago, I think probably at the beginning of this year, you have an inverted yield curve. Inverted yield curve is not good because once the curve is inverted, then you are talking about within 12 months or to 18 months, there will be a recession coming up. So this is exactly happened before the financial collapse in 2008. There's an inverted yield curve. Then 12 to 18 months, there's a financial crisis. And those are based on historical data. And negative yield debt has record 15 trillion. And basically 1 trillion in 2 business days. That's a lot of debt. And of course, Trump already declared China is a currency manipulator. And of course, people fight for safety. There's so many uncertainty. They go to commodity. So this is not about inflation hedge. Probably is about safety. It's whether they trust the central bankers or the policy or monetary policy. And only in hyperinflation or stagflation is gold will be an inflation hedge. So probably in the 80s, you have a stagflation. So commodity will be the gold will be the inflation hedge. And also basically talk about the debt. So the debt is the problem right now. The global economy is choking on debt. Central bankers are determined to have more of it. So because that's very true, because the Federal Reserve already cut interest rate, and also the Australian central bank, as well as New Zealand, they cut interest rates as well. Probably Australia will have another housing bubble coming up soon. And so we'll see. It looks like we almost finished the cycle for the housing market and the stock market. But every presidential cycle, based on historical data, the stock market will increase up to the presidential cycle. Probably the stretch can go to next year, but not a financial advice. This is just based on the past historical data. Almost every presidential cycle, the stock market is doing well. But I think except one, I forgot which one. But I think just based on historical data. But I could be wrong, not a financial advice. I could be wrong as well. So you never know what's going to happen. So we'll see. And also the bond market. Bond market is actually maybe the next financial crisis will be from the bond market. And also the bond market is usually, I think the stock market only see short term, but the bond market, you can see like 5 years out or 10 years out. I think the bond market will tell you a lot of headwinds coming up. So let me know what you think about the gold, whether gold is because gold versus faith in the central bank. That is very interesting. So that means people lose faith in the central bank or monetary system. They will fight for gold. And this is very interesting perspective. Let me know what you think. Do you think this will be the next financial crisis? People will fight for gold, or they will go to Bitcoin? And because Bitcoin right now, people see this as a lot of people already see this as a digital gold. So we'll see. Let me know what you think about this gold versus faith in central bank, as well as do you think gold, a lot of people will see Bitcoin as a digital gold for the next financial crisis. They will park their money in there. I would love to hear from you. If you find this video helpful, smash the like button, subscribe to my channel. Also share with your friends. Make sure you subscribe so you don't miss out the upcoming airdrop giveaway or token swap. Also, you can follow me on Twitter as well. And if you have already subscribed, make sure you hit the notification bell so you don't miss out the upcoming videos that may involve token swap or airdrop. Remember, crypto deep divers, we the people take control of our money. Stay wise, stay safe, peace. I'm not a financial advisor. Investing in cryptocurrency and other commodities can has inherent risk. Please use your due diligence.